Good day all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, and we're at July 9th, 2019 at 2:15 p.m. Central Daylight Time. Finally, I'm on time doing these. As you can see, a down day today in the corn and wheat where the beans got a bounce. Now, when you look at where the market went down to, you'll understand we got down to some key support levels in beans, the Bollinger Band, and some of the other numbers. Tomorrow's the Fed Chair, Powell, speaking in front of the House Financial Committee. Then on the next day, he speaks before the Senate. So we have 2 days of testimony coming. But the interesting part, too, is all of a sudden today, the meat markets exploded to the upside. There's more cases now being discovered of African swine fever. Apparently, Thailand is one that could have it. Another thing that's going on is the U.S. and China are due to revive talks, trade talks this week, could be today, tomorrow, over the telephone. I am not saying that that's what made the hogs go up. It could be. I think it's the combination of China probably having run low on meats to a degree. I'm talking pork. They're certainly feeding chickens like there's no tomorrow and other types of animals. But the pork is a problem for them. It's going to take years to rebuild the herd. And the meat that has been slaughtered, well, wherever it's being consumed, you've probably taken your stocks down. So let's go to the soybean market. You can see how the market ran down to the 18-week moving average of closes has bounced a little. For the week, we're up 10.5 cents. So that support zone held. Now, today was a huge reversal day to the upside. I can call it a key reversal because from the break, the market made the lowest low, came back, took out yesterday's high, closed over the open and near the day's high. So until today's low is taken out, as a technician, I'd be looking at this and saying, we may have run the course on this correction at this point. I don't know that that means you're going up a lot because of the market waiting for Thursday's USDA and World Supply Demand reports, but we're trying to get an idea here as the market's now probably having the shorts do some covering in front of that key report. We're going to try to figure out what acreage looks like, estimates on yields. We'll keep getting all that information. So as you keep coming down here, you have a reversal finally. If you continue rallying, I would look for the 100 to the 18-day average to be your levels of resistance on the way back up. And this is what I was talking about when we started talking just before. You can see how the market came down yesterday. Today the market goes down. The low is 8.90 and a quarter. 8.90 is the lower Bollinger Band. For a quarter cent, who cares? You're at that point where even yesterday I was wondering if you weren't going to see some short covering come in, and now you're getting that level of it. So how the market performs going into that 118-day average is important, but more important is going to be the supply-demand numbers we get on Thursday, as everybody's going to extrapolate from that and try to figure out just where this market might be headed. When we come to the next chart, which has got the slow stochastics, you're oversold. So you have a market that has fallen from a Bollinger Band top to practically the Bollinger Band bottom and getting a bounce in it. Still a bear trend, an oversold one. Will say that it hit a downside target, and now the question is, what does it do on rallies? In the meal market, you didn't quite hit the Bollinger Band. The market did get under yesterday's low, took out yesterday's high, closed sharply higher. Now, this market does have what we call the embedded reading. An embedded reading in stochastics happens when the market gets both numbers that make up the reading going sideways under 20 or over 80. That's the embedded for at least several days in a row. So you have today both numbers under 20, yesterday both under 20, the day before under 20, the day before under 20. It's really the fourth day of it. What you have to be a little concerned about is the market closed near the highs of the day today with the reversal to the upside. I didn't say that that's the end of anything yet. I'd like to see when this Bollinger Band, the red line, not Bollinger Band, the slow stochastic red line, the K line, gets back over 20. But I do think that, again, this market's now going into a pause phase in front of that key report on Thursday. In the soy oil, this market's rallying back up towards that line in the sand, as we refer to it, the 18-day average of closes. The one thing that is striking is how sideways the action has been in the soy oil. It doesn't look anything like you had your break in the meal or anything really like the soybeans. So this is a market that just keeps winding, as I'll call it, inside of here. It's a trailer market. It's not leading a trend up or down. It's the end of the tail of the dog, and it's just whipping back and forth depending on what the meal and the soybeans are doing. In the corn market, this is an important setup. You now have the market back into the downtrend with lower highs, lower lows confirmed today. If the market takes out the 448 level, my instincts are, in looking how this moving average is going, if you look at it, this is today. Day before, the market fell a half a cent. Day before that, the market, let's just see, fell just a quarter, not doing an awful lot there one way or the other. So even if you take out 448, the question is, can you get the bump through and stay over the 18-day average? If you do, then what happens is I'm going to call this break over, and I will think the market's re-entering a period where it's going to try to rally one more time. But the key is to get over that high and then close over the 18-day average. What do the bears have to do? Because the trend is down, they have to defend the position now. Only one time did you get down, actually it was 3 days to be honest, but it's one time on this big break that you had, and the market got surprised. Now the question for the government is, was their acreage number right or wrong? Are they going to correct it for corn plantings that we saw? In the wheat market, this is still a market that's fighting with lower highs, lower lows. Like soybeans, if you take a look, today's low is 498 3/4, 499 1/4 is the lower Bollinger Band. I think the pros stepped out of the marketplace. I think that they might have even done it back here. You got to bounce. You've checked it out again. We'll see if you can carry from here or not. But this is an area that even while you're in a downtrend, you're oversold as can be in front of that key report. In the sugar, we're in the downtrend, lower highs, lower lows, until you take out the high way up here now, and that number's 1265. I think the bears have control of the market. It is an oversold market now. It's already hit a Bollinger Band. Even if it gets down there, you're only back to about where you were, so be a bit cautious with that. In the coffee market, you have a market that went into a state of collapse yesterday. To me, the surprise was that the market didn't run for the 18-day average today, but I don't see anything that's a sign of strength on the market. I see a market out of an uptrend, momentum broken, the market trying to correct an overbought condition. I'd be surprised if we don't hit that 18-day average. In the cocoa market, you've established an uptrend with higher lows, higher highs, but the barrier of resistance, this is before you hit that. You hit this yesterday. Notice how the market's getting thrown back from the Bollinger Band. And I'll repeat what I said before. First time you hit Bollinger Bands, often you get reactions from that number. It's not all the time. If it were all the time, you wouldn't be seeing me. But it's often. And often is a very good word. In the cotton market, you went under the Bollinger Band. Now, if we take a look at yesterday, you had not. So today's the first day under it. Are we going to get a bounce away from that? Right now, we're about 110 points under it. The question is, does the market break away, or is this sideways action? And this is where the difference comes in the Bollinger Band. Sideways action is like a spring in a pipe. It's very different than when you have a broad market like we had in the soybeans that falls from a big high number to a low number and gets a bounce, and you can look at it differently. This is power. And once the power releases itself, it can carry further. I never look to see is the market overbought or oversold. I look on when this happens. I look to see the next day, is it going to follow through with momentum? The market certainly has hit downside target of the lower Bollinger Band. It did before. It bounced right away from it the next day. So no matter what, this is not, in my opinion, a sell area. But the question is, on rallies, will it be? And that's what we have to study. In the cattle market, big day up, 200 points higher, fighting at the upper Bollinger Band, trend up. Now you have a pattern of higher lows, higher highs. Admittedly, you're in a resistance zone. If there's some big piece of news, why not run to the 100-day average? If there's no news, you're over the upper Bollinger Band. The odds of staying over that are only 5% of the time. I'd be cautious. Same thing going in feeder cattle. The difference in feeders is it's been in an uptrend. It's the first time it's hit this. Do you see that? So I think smart money took some money off the table. Yes, I can argue this is sideways action as well. In the hog market, I had pointed out, and I know I did in some of the prior videos here, that I thought this would be a support zone. We were falling back and we got thrown back to the upside today. Now this is a limit up close, so you can't go any higher in one day. The way that it worked out, it closed over the 18-day average. It took out the last swing line high, so you've negated the downtrend. The question is, from here, does the market have punch? If it has punch to the upside, why not the upper Bollinger Band? You have fallen so much in such a straight line that it takes very little to get this going. Obviously, I don't know if the August hogs is the right play. You might want to be moving back, like I've said before. If ever we get a deal with China, it's the December back that I'd be looking at. And I know that I had mentioned option strategies, got to be 2 months ago now. And they were a strategy, buying a call, selling a put. So you're still very much live in, buying a call and writing a higher call. And you're very much live in that if you worked with one of our brokers here, if you decided to do that. Now the question is, could this be a sign the market is finally giving us a bottom of sorts? I talk about this and a heck of a lot more in our futures trading kit. We created something that if you're new to futures, or you want refreshers, or you want to get our charting software, you want to work with more of our information, well, this shows you how to get it all going. And we've created this where it's a link. It just opens up on your desktop. Away you go. You can save the link, obviously. It's going to open up there. And it gives you both the history of the market. It's going to give you chart patterns galore. So for those of you that are chartists and want to see how that part worked out, it explains technical analysis, why it's okay for some, not okay for others. A lot more information in the different chapters that we have. And options, of course, are discussed on the futures markets. Then you get the cause and effect, which I think's in this environment, real important, because it explains Fed policies, how they work. You know that we offer the Pivot Point series videos. We put them in here as well as the Arun indicator, so you can work with both of those should you want to do that. Then from the CME group, we link right into the CME group. So it's forever changing their different array of their different brochures, their quizzes that they have, features to help you get started in the futures market. How do you get this from us? It's really simple. Either call my staff or go to our website. On our website, you'll see a carousel of free offers. Click the Futures Trading Kit. You'll get it. We'll send it by email. You can also click right up here to get to that page. I'm Ira Epstein. Have a good day.